I'm looking at the Euro-Yen daily chart. The daily chart is trending downwards as well, but it hasn't been away from the 800 simple moving average for an exceptional period of time. Just 419 bars. So the downward trend certainly seems to be in effect and certainly seems to be moving along quite nicely. I think if you've looked at these currency pairs lately, it does seem that downward is the way it's going. You can also see that on the daily chart that it's at the bottom of its range. The bottom of the range is 124.30 or so. And below that level, we don't have much to stop this pair from going quite some distance. However, we're 200 points higher than that right now, 250 points higher than that right now. So for a longer term trader, there really wouldn't be anything here that you're looking at in particular, except for if the currency pair breaks below that 124.30 level. Now, I'm not saying that our friend Paolo is a long-term trader. I'm just saying that he looked to short the currency pair, and that would be going with the trend. However, it's at the bottom of the range right now. So what Paolo's thinking is of selling the currency pair, but it's at the bottom of this daily range. And so maybe that isn't really necessarily the safest long-term trade, although there might be plenty of room for the currency pair to go down on the really short-term charts. But in the bigger picture, I'd wait to go short until it fell below 124, and I'd be thinking maybe this is due for a rebound back upwards because it's at the bottom of its range. If we look at the 4-hour chart, the currency pair has broken away from the 800 simple moving average, fallen, and it's coming back up and touching the 62 exponential moving average on the 4-hour chart. Now, there's something special about it rising back up and touching the 62 exponential moving average. This will traditionally, in the midst of a breakout away from the 800, I don't want to do a retracement, I want to do a shape. This breakout away from the 800 right here is a surprise trade. I call it a surprise box because it breaks out of a box that looks like a little gift or a surprise inside of a box. It breaks out and starts to fall. Traditionally, the 62 exponential moving average will act as a barrier in the midst of that trend trade, so that when the currency pair crosses and closes above the 62 exponential moving average, then that trend trade is no longer really, practically speaking, in effect, and we could close that trend trade and move on to the next idea. We're just about to get to that point where the short trade is over and the trend trade is over, and maybe a counter trend trade back upwards makes more sense. Maybe that's a barrier, and that's something that we're going to have to look at and concentrate on and pay more attention to. This is the 1-hour Euro-Yen. It doesn't really show me anything except for the 62 is coming up to meet the 200 simple moving average. Traditionally, in the Arizona rules that we've taught, the 62 below the 200 and the 200 below the 800 is a trending phase in the market. So now we've got 3 time frames, the daily, the 4-hour, and the 1-hour, that all show that this currency pair is still sort of in a short-term and a long-term trending market lower. However, this currency pair is starting to show signs that the 62 may cross up above the 200, and that could be the early warning sign that the trend is over and that we could be heading back up towards the 800 simple moving average, or at least just going sideways for the time being. What would give me an indication that a short trade is reasonable? A move to close below this trend line on the 1-hour chart and below the 62 exponential moving average. That would bring the 62 exponential moving average definitely back down below the 200 simple moving average. It would create some distance between those two moving averages. We're not at all oversold on the Boscillator. We've only been away from the 800 simple moving average on the 1-hour chart for 316 bars. That's not long enough. So there's plenty of room for this currency pair to go longer away from the 800 simple moving average. Let's check and see if there are any comments. Maurice says he's thinking of shorting at 126.80 if it comes back to it only for the short term. I love that. Love that. Okay, I think, Maurice, that's a really good idea. Okay, this is the 30-minute chart that has been away from, I think it's been away from the 800 simple moving average now for quite some time. 644 bars. I think that's actually a fair reading and a correct reading. And that means that the currency pair is really maybe overdue for a trip back to the 800 unless this thing resets and I get a different reading. If it does not fall below this trend line, and instead of falling below the trend line, this currency pair rises up and closes above the red horizontal resistance line at 126.98, then I think the currency pair could be making its trip back upwards to the 800 simple moving average. And just like we've talked about, the other time frames, like the 4-hour, looks like it's ending that short trade, and the 1-hour looks like the trend could be coming to an end. If this currency pair goes above 127, we could see a move all the way 150 pips higher to 128.50, and that would make sense. That would fit with everything else that we've looked at so far. However, if it breaks below the trend line and starts to fall again, and the 62 exponential moving average on the 30-minute chart starts to go below the 200 simple moving average again, then we could see another 400 or 500 pips of movement until we start going back to the 800 simple moving average again. The 15-minute chart is right on top of the 800 simple moving average. That means, for me, that we're looking at a range on the currency pair, and this currency pair could break out of this range. It already looks like it broke out or tried to break out of this range right here to the top side, but then the currency pair went right back inside of that range. So we can now expand this range to something wider, and this is a surprise box on the 15-minute chart. That 15-minute chart surprise box means that if the currency pair breaks above or below, and I just deleted it, currency pair breaks above or below this range, it could be a breakout that leads to a trending move in either direction. Once again, the top of that surprise box is just about the same as the horizontal support resistance level. And so if it breaks out above, we could see a trade significantly higher. 128.50 would not be out of the question. However, if it breaks out of the box lower, we go below that level that we talked about earlier today, and we could see this currency pair fall as far as 124.28, which is the bottom of the whole range on the daily chart. Let's look at something even more interesting to me. Let's look at the 5-minute chart on this currency pair. It's been away from the 800 simple moving average for 576 bars. Doesn't seem like it's been that long, but it looks like it has. And the currency pair at this point would generally need to go away from the 800 simple moving average. Problem with that is 4 times in a row it got really close to it and almost touched that level. And for some of you, this currency pair may have already touched the 800 simple moving average and would be free and clear to go upwards and away from the 800 simple moving average. All in all, it looks like the daily chart, the 4-hour chart, and the 1-hour chart were all trending. However, they were all sort of consolidating and getting closer together, and it looked like that trend could start to come to an end. So being short immediately doesn't seem as reasonable to me as waiting for those trend line breaks. And buying the currency pair above 127 seems awesome and totally reasonable, and a breakout which leads to a little bit of a counter trend trade or a relaxing of the short-term trade, the short trades that were put on over a long period of time.